Hi, my name's Dan. I'm a buy-to-let mortgage advisor, a coffee enthusiast, and a professional explainer of stuff your lender really should have made clearer to you years ago. So you've got an interest-only mortgage on your rental, and the term has ended. But now what? Do bank elves come and collect the keys? Do you magically get upgraded to a property mobile platinum tier? Spoiler alert, none of that happens. So what does happen? You owe the full amount still, and today I'm breaking down exactly what your options are, how to avoid panic selling your portfolio, and why a little forward planning can save you a fortune. Stick around because this is a video your future self will thank you for, probably while you're sipping a cocktail on a beach, funded by your cash flowing portfolio. So what is an interest-only mortgage? Let's rewind a little bit. Interest-only sounds lovely. You're only paying the interest each month, low payments, high cash flow, what's not to like? But here's the catch. The original loan, whether it was 150,000, 300,000 or enough to make your eyes water, it hasn't shrunk at all. It's still there waiting like a financial game of Jenga, one wrong move and it all comes crumbling down. At the end of the term, the lender wants their money back. Not eventually, not when the market feels better, they want it nowish. And you need to make a plan. What actually happens when the term ends? Here's what most landlords think will happen. The lender will just offer me another deal, right? Yeah, maybe, but don't count on it. Especially if your income's dropped, your property's value has dipped, or you now own more rental properties than you can name. If you do nothing, the lender might put you on their standard variable rate, which is often eye-wateringly high. Ask for a full repayment, or in extreme cases, start the repossession process. Now this sounds dramatic, but I have seen it, and landlords get caught off guard, scrambling to sell in a weak market. It's not pretty, but it is avoidable. Let's break down your actual options, minus the jargon. So option number one really is to remortgage. I'm assuming you've still got decent income, your rental stacks up, you might be able to get a new interest-only deal. With a specialist lender, if the high street lender says, computer says no. Now, the option number two is to switch to repayment, and this will bump your monthly payments up for sure, but you'll chip away at the balance over time and you will avoid the looming lump sum. Then you've got option number three, which would be to sell the property. Sometimes it's the cleanest option, sell up, pay the loan off, pocket the equity. The downside, you've got capital gains tax and you lose your lovely monthly rental income. And then option number four is to transfer into a limited company. Now this one's a little bit spicy because you end up refinancing via a limited company structure. So you get the potential tax benefits down the line. But beware, you might pay stamp duty, capital gains tax and solicitor fees up front. Now it's a smart move for some, but not for everyone. And then there's option number five, refinancing your portfolio. Now, this is like landlord Tetris. You can use equity from the other properties to pay off the one that's due. Done right, you can keep the property, spread the debt, and you can come out ahead. Now, here's a little story about one of my clients. Let's just call him Dave, but that's not his real name. Dave had a £200,000 interest-only loan coming to the end of its term, but he had no plan and was one step away from sticking up a for sale board outside. We looked at his portfolio and we just ended up refinancing two of his other buy-to-lets. We freed up enough to repay this one without selling anything. Now, the monthly profit went up, stress levels went down, and Dave got to keep his dream passive income alive. If your term ends in the next 6 to 12 or even 18 months, don't wait. Start planning now. Talk to someone who gets the market, knows the lenders, and can actually run the numbers. And that's me if you haven't figured that out. The worst thing you can do is bury your head in the sand. The best is to book a call with someone like me who does this every single day. Now, if you found this video helpful, please just give it a like. It helps other people find me as well. Also, don't forget to hit the subscribe button and drop your questions in the comments below. I'll reply to as many as I can. If you're ready to take control of your buy-to-let future, book a free chat. The link's in the description. I'll see you next week.